Making on Wall Street. It started to heat up just before Labor Day, and today, of course, Berkshire Hathaway agreeing to buy Burlington Northern Santa Fe for $26 billion or $100 a share. Anthony Scaramucci, he is the managing partner at SKYBRIDGE Capital, where he helps manage over $1.5 billion in assets. All right, let's look at what went into Buffett's big bet, especially how liquidity is pushing up prices. Right, Anthony? Good to have you with us. Thank you so much for coming in.
Appreciate being here. Thank you for having me.
So we were just talking even before the program, this whole idea that there is a lot of liquidity in the market, and that is creating this push for asset prices.
You got a couple of things going on, but the main thing was back in March, Ben Bernanke got out and said, listen, we're not going to let any of these financial institutions fail after the failure that took place in September. If you go back to that testimony that he made in front of Congress, we're up about 61% in the markets from that day. So some people call this a junk rally, but what I actually think this is, it's a liquidity-driven rally from the trillions of dollars that the Federal Reserve has created in the marketplace through quantitative easing, the repurchase of treasuries, all of the different tools that they have in the monetary pocket. They've created $6 to $7 trillion worth of money over the last year, and it's starting to flow into asset prices now.
And also, when you take a look at corporate balance sheets, they're very rich with cash, right? So what does that project, at least according to what you're seeing, what does that project for the future of, let's say, equity prices? Well,
I've been, last 6 months reasonably bullish on equities. I think the message you're getting from Buffett today is a little mixed. We're all excited about the Burlington Northern deal, but you have to look at the way Buffett is purchasing Burlington Northern. He's paying cash, but he's also giving up his stock. And if you read any of Mr. Buffett's annual reports, in those annuals he says that his stock is quite dear to him. On the fact that he's giving it up, the last time he did this was the General Re acquisition in 1998. This acquisition, if you go back to the charts on Berkshire Hathaway, it was when it looked like it appeared to be fairly rich in price in terms of Berkshire Hathaway. So maybe we're getting a signal from Mr. Buffett that markets have moved a lot. I know he wrote that editorial last year calling for a bull market in stocks again. By giving up some of his stock today is a sign that maybe he thinks his stock and other stocks have gotten a little rich. But I know he likes the railroads. Low PE, a lot of synergies, a lot of cost saves, and I'm sure he's very bullish on the prospects for them.
What do you think about this idea of asset prices and a bubble that is coming? I mean, is there going to be a lot of money made before this bubble bursts? Is this got a lot of room to run?
I think you've got another situation where the Federal Reserve made a decision. Sometimes they say you got to take the punch bowl away. In this case, we have a leverage hangover, and the Federal Reserve decided that rather than taking a punch bowl away, we're going to put extra vodka in the punch bowl, and that's what they're doing with quantitative easing. It's got the drunk back up off the canvas, so to speak. We're back in there in a buying frenzy, and I think what you'll see is a lot of people are going to get tipped back into the markets just as the markets are continuing to get frothy, and that typically happens. And so my guess is that there's a little bit more room to go here in the equity markets. This is a liquidity-driven asset revaluation, and basically Bernanke said to avoid a depression he would helicopter money into the streets. He has effectively done that, and it's now showing up in equity prices and other asset prices. Yet when you look at the underlying fundamentals of the economy, there's still a lot of pockets of weakness and uncertainty.
Last question for you. Is there a possibility, though, that the private sector will be able to take over from the public sector in some kind of seamless transition, or are there going to be some big problems ahead, do you think?
Pimm, when have you ever seen a seamless transition and a handoff between the public sector and the private sector? I just think it's wishful thinking. Surely the Fed wants to do that. They want to prick the bubble right at the right time. Alan Greenspan is writing chapter and verse about how it's impossible to prick these bubbles. It's a big issue for the Federal Reserve. They clearly want the economy to grow again. There's great uncertainty, and I think the markets will be fraught with risk over the next 12 months. Perhaps not over the next 6.
Not after the next, but after that.
Over that.
All right. I want to thank you very much, Anthony Scaramucci, coming in, managing partner of SKYBRIDGE Capital. Appreciate it.